It's in New York, it is 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID live stream Series 11, Episode 1, that adds up to Episode 61, starts here. Very exciting news this week. A new chapter has begun at the Japanese Stock Exchange, JPX Group in Tokyo, offering all sorts of exciting and interesting new products. Also, actually very good to see Japan Korea Marker, JKM futures coming from Tocom, which is also, of course, now a division of the Unified Japanese Exchange. Elsewhere in Asia, all the very, very best to CME Group's Managing Director and Head of Asia Pacific, Chris Fix, on his retirement after serving CME for the past 7 years. Over at Coinbase, wow, all the best of luck to Brian Armstrong and the Coinbase team as they're continuing to deal with the European Union's new law on cryptocurrency. It went through the Euro Parliament just last week, and it was described as anti-innovation, anti-privacy, and anti-law enforcement by the founder of Coinbase and its CEO, Brian Armstrong himself. Meanwhile, on a final note, China has had a regulatory crackdown. There's going to be no more Chang'an Dishi, no more yin yang, and 5 elements are no longer part of the conversation if you're a registered investment advisor or broker in China. Chinese brokers can no longer rely on feng shui to provide investment advice. No yogis, that's of course in India, no feng shui in China. What's next? Good grief, we'll have to see what's going on in the world of markets with all of these prescriptive regulations. All this and more has already been covered in greater detail in Exchange Invest Daily, the unique newsletter of the Bourse Business. Send us an email or hit me up, Patrick L. Young, on social media, whichever stream you're watching this on. Our show today, we have a fabulous guest coming to us live, Hamish Adourian. He's on the topic of Sinara, bringing trading solutions to life. Hamish Adourian is the head of sales and marketing at Sinara, a London-based software house established for over 30 years and known as a trusted software provider and partner to leading financial institutions across the world. Hamish joined Sinara in 2006 as a software engineer, building a strong background in the design and development of systems for exchange operations, commodity trading, and market data distribution. Having a keen interest in business, Hamish progressed into sales and marketing, bringing to Sinara's customers his insights into how the financial markets manage to work, and indeed how technology can be used to solve the challenges faced by participants across the financial markets. In 2021, Hamish became responsible for Sinara's sales and marketing operations and continues to champion the Sinara TLC initiative, which has resulted in Sinara investing in a new suite of trading lifecycle components for brokers, exchanges, and clearinghouses. Hamish, welcome to IPO-VID. Where in the world are you today?
Hi, Patrick. Hi, everyone. I'm in London at the Sinara offices. In person at our own offices.
How magnificent! So you're sitting where, just on the fringes of the city of London, as I recall correctly, for your offices.
Yes, literally down the road from Tower Bridge. You walk outside on Tower Street, you see the famous landmark right there. So yes,
that's quite a spectacular locale to be in, and very, very close to the city. And Absolutely. You also benefit from the Jubilee line and other things are all around you. You've got great transport infrastructure these days. Fabulous place to be altogether. Let me just say a very quick hello, good evening to Les Calvert. Lovely to see you. Evening all, says Les. Good evening, Les. Great to see you all together. Same time, Marcus Ward. Good morning, good afternoon, and good evening to everyone, mimicking my opening lines. Thank you, Marcus. It's lovely to see you too today. And last but by no means least in this trilogy of early arrivals and commenters, Simon Huckle. Good evening, everyone. Good evening to you too, Simon. I hope all's well in your world and inflation's not treating you too badly in these slightly crazy times. So if you've got a comment or a question you'd like to ask about financial technology, don't forget you can send it to us on any of the different social media by which you're watching this live stream this evening. We're live on Facebook, LinkedIn, and YouTube, to Hamish Adourian. So Hamish, I mean, tell me a little bit about your background. How did you get into technology?
Well, gosh, that's going back a fair few years now. At university, I studied, well, funnily enough, computer science and physics. I always had the interest in computing, in software engineering, in technology. And I joined Sinara 2006 straight out of university as a software engineer, as you kindly mentioned in your introductory piece. Worked on several projects over the years for different exchanges, brokers, other types of financial institutions, quite large projects. Often systems most people don't really see. So it makes it hard to talk about what it is you do for a living. But yeah, gradually, over time, delivering more and more of these services, getting to know the customers, moved over into the business side of things. And now I lead the sales and marketing function at Sinara. And yeah, it's really great to be part of the financial markets industry. There's so much going on. I'm sure we'll be covering lots of things this evening across the industry. And really, there's such a transformative role that technology has to play right across the trading life cycle, and just finding places where we can actually deliver some really interesting new solutions and seeing them come to life and actually be deployed and have people use them, I think is really great, and it's a great job to have.
So it's really interesting because one of those things, I mean, you mentioned is the fact of course, the financial markets themselves aren't particularly well known. And a lot of the times the people providing the technology for them are almost invisible outside of a relatively small cadre of people. Now, in your good company, Sinara, you've been around for 30 years. You've done incredible things right through the capital market revolution, even from before the capital market revolution was stated. I mean, you predate essentially the internet age in the early 1990s. Tell us a little bit about the history of the company, please.
Sinara was established in 1989. We always like to say we've survived quite a few sessions. I'm sure there'll be a few coming in the future. But yes, throughout our history, we've worked with financial services customers. So that's always been the focus of the business right from the early days. We data solutions, so delivering market data integration piece. Over the years, market data itself has changed quite a lot, the different types of feeds that have become available. Some challenges remain, and a lot of the early projects were really making it easier to integrate complex market data feeds into, say, a brokerage or an asset manager who need to do portfolio evaluations, for example, and needed to get live market data in or end-of-day data for all their various tasks. So there were lots of projects that we did over the years, gradually built up a reputation, began working with larger exchange groups, some of our well-known customers such as LSE, LME, Euronext, working on larger and larger systems over the years. So yes, it's been nearly 30 years where we've delivered a lot of essentially bespoke projects for companies right across the financial markets. So that's really, we're brought in where somebody's decided, right, we need a new piece of software, but it's not really something that you can buy off the shelf somewhere. Or even if it does exist off the shelf, it's not really something that's ready to use for that business. It's something that either they think they can get a competitive edge out of it, or it's something that's really unique and specialist to the business itself. So that's when we'll be brought in, often with a bunch of business people thinking, oh, we've got this really great idea. We think we can do things in a different way, take a new service to market, or there's something that just isn't working very efficiently internally. There's a business process that's just too slow. It's keeping the business back. And then we'll be brought in and told, well, okay, how can you help improve this? Can you deliver a new piece of software that can solve all these problems, take a new service to market? And that's where we'll go in and really have to try and address that tough challenge. And often we like to say we're brought in to do some of these hard things, but no one else really wants to.
Well, it's quite incredible because when you look at that history that has been there for, I mean, first of all, Sinara from the time that it was actually born, which is absolutely incredible because, I mean, in 1989, technology really was not there in so many places. And we were used to very much fixed, not fixed gateways, but fixed gateways. You bought your Reuters terminal and it sat in the corner, and your other terminals from places like ADP Comtrend and Telerate and all these other companies that no longer are with us didn't interact in any way, shape or form long before we had APIs or any of this exciting stuff, let alone the whizzing world of the interweb, which came along, basically, I mean, was only commercially being used within 5, 6, 7 years of the foundation of your company. So it's an incredible journey to bring that together. And I mean, I suppose really the thing that interests me though is then you look at that history and even your history as you've been going on, and you've got this fascinating, almost a paradigm. I don't want to say paradigm shift, but it's interesting to look at the philosophy, because essentially, I mean, technology and markets, is it changing the markets, or markets changing the technology? And I think that's really, really fascinating. I know you talk about it a lot. And I mean, just a very, very high level, what do you think the situation is at the moment? Are markets actually reacting to the technology around it, or is the technology still being sort of built to fit the markets as they are?
Well, I hope this isn't a cop-out answer, but I think it is genuinely both, and in both ways. And it's a mixed picture as well, because different companies in different parts of the market are at different stages of development in terms of the type of technology they have. So you will get some companies, be they brokers, exchanges, clearinghouses, people on the buy side, asset managers, who make some incredible use of technology, way ahead of other companies, almost ahead of the time, really. So you get that on one extreme, but you will get the other extreme as well, where actually some of the systems may not necessarily have been updated for years. There are still a lot of manual processes in place. And in many cases, they'll be aware of that. There's a lot of things which are quite high risk, especially in areas of post-trade, for example. As soon as the markets start becoming a lot more volatile, they'll be open to risk there if not managed properly. So there's a lot of areas where technology development has a long way to go. So it's certainly not by any means a uniform picture across the industry. So for us, it's really interesting because we see customers right across that particular spectrum. So we might work, for example, with a financial institution that's got some really great technology. They may even have their own in-house development team, but actually they want to do something that's entirely new, a new trading platform, a new mobile app, for example, a new market data service, RFQ platforms, whatever they are, all kinds of different solutions that they want to take to market. But they just need somebody to come in and really bring that to fruition really quickly, using agile technologies, using some of the pre-built solutions that we've developed over the years. You mentioned Sinara TLC, for example, at the start. So it's a suite of pre-built solutions that we've been working on for the trade life cycle. So for example, if you're a broker and actually you want to improve your order management solution, then we've got some pre-built components that can help you with that. If you want to improve your market surveillance, for example, and you want to reduce some of your costs in that area, there's things we can help you with there as well. So that's on one hand. But then on the other hand, you may have firms where actually they're almost going back to the drawing board and thinking, actually, we need to improve the use of our technology from the very start. They may only have very limited use of, it's the classic, Excel spreadsheets, legacy systems that may have been used for many years. And generally they've been working okay. So these aren't things that are falling apart, but businesses realize that they need to make investments if they want to stay competitive, if they want to actually grow their customer base, if they want to actually take advantage of some of the inevitable trends across the financial markets more generally. I mean, look what happened at the early stages of COVID, for example. You had a massive spike in retail investors coming on board. And, we can talk about that later. And that's had a huge amount of ramifications for the types of services that many of these companies will want to offer, and the expectations as well that investors have. If you're used to being able to use a nice mobile app to manage your portfolio, are you really going to accept a much older application when it comes to doing your professional investing, for example? So there's that whole range of types of companies that are different stages of development, and we go into all of them and try to help them pull up their use of technology. And there's all kinds of amazing applications that can be developed at every level to try and both improve better solutions to customers ultimately, but also make life easier for employees themselves of those institutions.
Yeah.
Traders, for compliance officers, for management who want to keep track of what's going on. I mean, ultimately, technology, we often forget, it's meant to actually make people's lives easier. And if it doesn't, it's not really doing its job. Right?
Well, it's very interesting, isn't it? Because that brings up a whole new aspect, which is related to kind of digital thinking. And I think I'd like to go there in just a second. But first of all, we've got a few excellent comments. So I just want to engage with the audience. Thank you so much. Keep the comments and questions flowing. So absolutely fabulous to see so much engagement already this evening. I want to say hello to Ian Bonsor. It's great to see you this evening. Thank you very much. Hello, Peter Secco, and I hope Ari's well, and your good lady wife. Hello, John T. Good evening, everyone. Great to see you as well. And Anthony Clancy saying good evening, Patrick, Hamish, and all. We appreciate that, I'm sure, in every possible way. Now, we've got a couple of questions have actually come in. Oh, 3 questions have come in while I've been talking. Let's go to Simon Huckles made a comment. Oh, about inflation. I'm well, thanks, Patrick. Inflation will get worse before it gets better, in my opinion. More worrying is the cost of materials. That keeps going up overnight. £20 for a scaffold board that was £7.50 before COVID. That's actually quite staggering in terms of, I mean, a near 300% rise in the course of just a couple of years. Absolutely amazing, Simon. Thank you for that. And then we got a question. I'm not sure who it's come from. A LinkedIn user, not showing a name. Ooh, that's a very interesting question, Hamish. Is a particular type of financial institution leading in technology?
I think a lot of exchanges in particular have spent, because they've had to invest a lot of effort, obviously money, in performance, being able to handle increasing amounts of trading, millions and millions of orders per second coming in. They've almost by necessity, and of course having to transmit the market data as well, again, areas where Sinara have done a lot of work over the years. They've had to almost by necessity make those investments. And so they are much more sort of technology oriented, I suppose, than perhaps some other companies. So if you're thinking about who's necessarily leading, and what we won't mention any names as such, exchanges certainly lead the market in that respect. And also you can think of several exchanges who actually have their own technology arm as well. You've seen that kind of consolidation happening in the market as well, where exchanges are building some of their own types of technology and trying to license those out as well. So I think there's certainly a lot of that happening. And exchanges, well, on the topic of exchanges, the other area where we've come across a particular need there is they're also looking at how they can increase their market reach new types of customers, more direct interaction with the buy side. I think is a particular trend that exchanges have been looking at over several years now, and thinking about how they can create new types of services that the buy side can consume directly, whether it's, for example, new types of data analytics tools, new types of trading services. So that's an area of continuous investment as far as many exchanges are concerned.
Excellent. That's really, really interesting. Thank you very much. So there's a huge mix, but I'm delighted to see, as the publisher of Exchange Invest and somebody who builds exchanges all the time, that exchanges aren't doing badly in terms of trying to lead the world in the technology that they're using. That's very heartening, given the fact that actually it has to also be said, I think that when Sinara was first formed, it's fair to say that exchanges were behind the games in terms of what technology was being used by quite a long way. And certainly the mid-1990s and late 1990s through mid-2000s saw an incredible catch-up period.
We were involved in quite a few projects in that early noughties, early to mid noughties when I joined. There were quite a few projects that we were involved in. For example, those early trading solutions, fully electronic trading solutions that more and more exchanges were trying to do. So it's really interesting to see how that's all developed throughout the years. But I think there's still a long way to go, certainly in the financial markets. You're talking about the digitalization and digital thinking. To what extent have we in the markets just been looking at what we've been doing previously and just sort of transplanting that into the digital realm, as opposed to thinking entirely digitally from the very start? So, for example, even if you think of something as common as the front office, back office, middle office, there's a reason that historically arose. And in a purely digital realm, is that distinction necessarily still there? And that's some of the areas that we've been working at with some customers. So we're trying to sort of break down those silos do more integration, get more information in real time, rather than having, the trader sees one thing on the front office and you have no idea what's going on in the back office until the end of the day when all the various end of day processes run. So there's a lot of projects there to try and increase that.
Increasing the visibility through the office is quite considerable in terms of what you can do at all points in time, and also therefore help risk management. I mean, it's incredible to think that in my career, we used to have people writing stuff on trading cards, and you only really knew what everybody's position was every 4 hours because they had pits and at the end of the day in terms of overall client levels, whereas now you can do so much in real time.
And that risk management, I mean, if you look at what's been happening over even just the last couple of weeks, for example, we saw it through to COVID, that level of market volatility. And you've got to, if you're a brokerage and let's say you're keen to expand, you want to take on more customers, well, you've got to be pretty sure that you can do your margin monitoring properly. You can do that intraday. You can react quickly to those sorts of market events. Make sure you can contact your customers in good time. Make sure all those capital flows are being managed properly as smoothly as possible. Because otherwise, if you don't have those in place, then you're really risking yourself by trying to bring on all kinds of new customers while not really having, or still relying on, say, an old manual process to try and keep tabs on everybody.
Yeah, it's quite incredible. It's quite incredible altogether. And that actually, I mean, thank you very much. By the way, good evening, Ian Miller. Good evening to you. Lovely to see you once again on the show. Thank you so much for joining us. We got an interesting couple of questions, actually. I mean, you mentioned COVID several times. John T is saying, hi, how much and how has this investment changed by companies due to the COVID effect?
It's an interesting one, isn't it? Because if you remember what happened back in March 2020, within almost a couple of weeks, you had entire trading floors almost being vacated, but yet everything managed to continue. And all these decisions were signed off on remote working, on getting the connectivity in place. Decisions that would have taken months or not years, or that were being stalled, were just signed off. And by and large, things worked. And I think that's one of the sort of success stories, to put it that way, I suppose. What came out of that period is that the market showed that they could be resilient, that they could react to all these things, but they were stretched. They were absolutely stretched to their limits, particularly in post-trade, in settlement. I mean, in the early days, I think the clearing houses were absolutely pushed to the limits. So clearly resilience was tested. And I think that's still, talking about trends, I guess, continued investment in resilience is still absolutely a priority, I think, across all our client base, certainly. And not just necessarily technology resilience in terms of people, in terms of processes, to make sure that they can really cope with all of these. But in thinking beyond COVID, obviously, in the immediate aftermath, people have had to look at their budgets and consider what they want to do. But people realize that there are big changes happening in the markets, and they have to make investments if they want to be able to keep up with the competition. So while there was a bit of a hiatus, certainly this year, I think at Sinara, we've had also January, we also had a flood of queries coming in for people wanting to kick off projects. So I think, yes, maybe while there may have been a bit of a stopgap when people were taking stock of their positions, certainly right across the markets, brokers, exchanges, clearing houses, all three are looking to kick off projects again, both internal improvements, get things more efficient, but also deliver entirely new services, apps, websites, applications for their clients as well.
It's very interesting in the whole app economy. At the same time, I have to say, I like the comment that's just been offered to us by Women on It. It's interesting to see that with all this technology, good old whiteboards are still in vogue. Women on It hack the future. Yes, a very good point. But at the same time, there's nothing better, I think, for actually working out where you are than a very large whiteboard from start to finish. I mean, that's why Google have digitized theirs, haven't they, as an effort. Just moving on, Anthony Clancy, thank you very much for your point, Women on It. We look forward to your live stream tomorrow at midday London time, at midday EST and 5 p.m. London time. Anthony Clancy is asking, which country is developing and leading the software technology in the financial market, in your opinion, along with solid regulation? Gosh, that's 3 questions in one, I think. Have a go.
Well, I think at Sinara, obviously, we work with clients in quite a few jurisdictions, so the EU, the States, Asia. And I suppose it's hard for us to sort of pass judgment ultimately on whether they are effective or not. But what obviously we do have a role on is to make sure they can be implemented as effectively as possible. Certainly when MiFID came in, MiFID 1, MiFID 2, there was a huge amount of work in making sure that we could actually build systems that would extract the data, report them in an accurate way. And I think, my perspective on this, I think a lot of businesses, not necessarily all, but I think the ones who looked at this in as positive a way as possible, realized actually you could use this as an opportunity to try and get a data system in place that allows you to access as much information out of it as possible. So yes, the immediate goal is to get the data out to the regulator. But actually, why not use some of that data to develop some interesting new products? Why not use it to improve your internal analytics, your internal reporting, get some real value out of that? So I think that was a kind of a huge side benefit that's come out of the increasing amount of regulations that have been asked for. But in terms of which countries necessarily developing and leading it, we're a great one here in London, and there's lots of great companies based in the UK, certainly. We worked with other companies across Europe as well. In terms of the financial markets themselves, our immediate prospect space and some of the conversations we're having at the moment, so it was right across the world. Some really interesting countries you would not necessarily have expected to hear about. So I think there's a lot of investment happening across the board in some of the developing markets who are really looking at. I think it's quite interesting there with the developing markets because they're almost jumping several leaps ahead. They'll be skipping several generations of old technology and going straight to some of the new and interesting ones that are coming out. So I hope that was a bit of a half answer based on some.
No, I think it's interesting because you touch on a series of quite fascinating points. Now I'm going to come back to a couple in a minute, but actually we've got so many questions at the moment. It's absolutely fabulous. So Ian Miller, he's actually asking a question from me, putting me on the spot, by the way, and thank you. Question for Patrick. With building exchanges through the years, have you used Sinara for their expert services to help accelerate the process? Simple answer, yes, we have been involved with a series of different projects at different times where Sinara have been engaged, and I've always found them to be a very, very high quality organization who deliver excellent solutions, and they can manage to think out of the box. So I hope that helps that answer. I can't tell you who it was because I'd have to kill you, although at the same time I think that already Hamish has alluded to some of the projects around which I may have been involved at different times in the past. So that's a fascinating question, actually. Thank you very much, Ian. Now, talking of exchanges, lots of people say that market makers use sentiment from Twitter or Telegram groups to manipulate prices in their favor. Is this something retail investors should fear? I'm not sure that's necessarily a question for you, Hamish, so you don't have to answer that if you're not up to it. I think what I would certainly say is that exchanges that allow unlimited shorting of stock by market makers perhaps have a tricky issue, because then clearly market makers have an incentive to keep shorting that stock. But I don't know if you've got anything to add from the technology side, Hamish.
I think it's well, there's different angles to it. In terms of the direct answer to the question, it's essentially part of market surveillance, and good exchanges will be looking at this and thinking, well, what can they realistically do to monitor what's going on in the market to help protect retail investors. And of course, there are more and more retail investors coming on. But also, it's an area of sentiment analysis has been an entire topic in and of itself. And we've done a little bit of work, constructive way, I should add, for some customers who want to look at, say, news stories, for example, and extract, say, results, financial results or certain keywords, for example. So there's lots of good ways, I guess, looking from a positive perspective, that you can use sentiment analysis for. Whether it's actually effective, I can't really make a judgment call on that. But it is an area of technology that's certainly developed. But sadly, it's all technologies that can be used in different ways.
But actually, you're hitting a great point, Hamish, because the one good thing about things like social media and so on is that more or less anybody can aggregate that in the comfort of their own home. I mean, you only need a very basic level of understanding of Python, and you can probably manage to find out a huge amount of information. You may not be nanosecond perfect, but you'll certainly manage to get various interesting pieces of snippets. So I think there's a lot that you can do. Not saying that that's going to be as robust as the sort of industrial solutions that you need in high density, high volume, ultra low latency markets, but nonetheless, it's something you can use. And we've got a couple more questions coming in. Gosh, rolling alongside. Hello, Ian Bonsor. Great to hear from you again. Talking of exchanges. Oh no, that's actually the question we just had. I'm so sorry. We just added, I'm in control or out of control. Carl Stone. Hello, Carl. Great to hear from you. Good evening. One for Hamish. What new What new and interesting technologies are you seeing coming through the pipeline?
Okay, well, let's sort of start on that one. Okay, let's, I guess, talk about the obvious things, which are probably going to expect when you talk about, which is things like blockchain and DLT, digital assets, which I think it's probably more than just sort of a trend or a fad. I think digital assets, certainly in the exchange world, is something that's here to stay. There's a lot of investment going on that, and we'll see more and more diversification in terms of different types of digital assets that can be traded. And I think most exchanges will be looking at what offerings they can make on that. So the whole DLT area, digital assets, is certainly an important one. The other one, of course, is cloud technology. We were seeing more and more, certainly, of our clients across the markets wanting to adopt that, particularly for new projects. So a new system would probably immediately go into one of the different cloud providers. So there's more and more of that being adopted. But also different exchanges and brokers as well are looking at what's called lift and shift. So take their existing systems, move it up into the cloud. I mean, this is an entire conversation in and of itself, how we manage that. So we've been doing a fair bit of work ourselves in cloud technology and helping customers with that. But that's certainly an area that's going to keep continuing. So blockchain, cloud, AI is the other one. But again, I think it's more than just the buzzword. There's some really interesting things applied in the right way. And AI is basically just really fancy statistics. So let's get that out of the way. It's really sophisticated statistics, but applied in the right way on the right data, on the right volume of data, you can get some really useful information out of that and create some really interesting services. So again, that's something that will continue on. Something else, I think, the whole area of hybrid working, I'm not sure the ramifications have been fully sort of realized yet, especially in the capital markets, with more and more, say, traders working from home, how that will impact the types of applications that they will be using. I think that's an interesting trend that we may well see. There'll be different types of applications that we've perhaps been used to seeing in the past. So I think that's another area which I'm interested to see how it will develop. But also, it's probably not so much of a technology. In a way, it's more about development technology. A lot of firms do need to go to market a lot quicker. Mm-hmm. They need to make changes to internal systems quicker. If there's an update to an existing system, it needs to be deployed quicker. People are more and more used to these days to apps that just update. It just happens. So the more of that that can be put in place, I think, the better. But in order to actually do that, you need to adopt the right kind of the project management, whether it's a form of agile, properly managed agile. We can talk about that, to be able to reduce some of those software cycles and get things to market quicker. And you may have heard of buzzwords like DevOps, for example, how we can improve testing, especially with some of the complex products that we're building, how we can improve that so we can continuously improve quality assurance, improve testing, and get new products onto the market quicker. So I think in all those areas, really, we've certainly been working.
It's fascinating. I mean, so many things to unstring from that. It's quite intriguing. I mean, you mentioned DevOps and testing and so on. And obviously, one of the things that's key here in financial markets is that we can't have institutional or indeed retail financial applications which spend several years in beta, which was the way that Google managed to build themselves a huge empire, obviously, because otherwise regulators get terribly, terribly upset, and quite understandably so. And I think it's fascinating when you talk about DevOps and that whole symbol. Do you think that, I mean, is there a role within that whole ability to bring certain parts of the applications to market faster for things like low code and no code?
I've got a standard answer to the low code, no code thing. Somebody has to build the platform on which the no code works, and that's usually us. Goes in to write the code that will support the no code. But I think in general, it depends on the system as well. There are some in which some of those low code, no code systems, RPA, so robotic process automation, another trend. It makes good sense, and it may be a good way of doing things in some areas, certainly. But again, any kind of a new system where there's a level of complexity, there's nuances, there's different customers who need to use it in different ways. You may have a system where essentially you have multiple roles accessing it. You have one system where you've got the traders accessing it, where you've got compliance officers accessing it, and you've got the client accessing it as well. So you can suddenly see all the different combinations that need to be tested each time that there's a new release. So that's where a good DevOps process managed is just incredibly important.
Yeah, I mean, I think that makes a lot of sense, and therefore there is undoubtedly some no-code, low-code application that can be used, but it's by the time you've built the massive infrastructure, then you can manage to get things to market much faster in terms of particular things that can be used by a user group, etc. And that's the role for that kind of process. I'm here talking about Sinara, bringing trading solutions to life with Hamish Adourian this evening, ladies and gentlemen. We've just got about 20 minutes to go. If you've got a question, ask now, because you never know. The wonderful world of the interweb has a remarkable habit of suddenly managing to throw in a little bit of a delay just when you're asking your most interesting questions. Good question from Liam Moore. Hi, Patrick, Hamish et al. In respect of the larger or major exchanges worldwide, are these more likely to license a software rather than build their own, especially in regards to potentially adopting cryptocurrencies into the existing exchange?
Well, it is both. I mean, some exchanges, to address it in a more general way, I mean, many of the larger exchanges that we certainly work with have their own internal development teams. They do a lot of their own software, for example, but they will still bring in companies such as ourselves for certain projects. And there's all kinds of reasons for that. Your internal IT team often will be fully stretched. They will have their own tasks to do, and it's incredibly difficult to then say, build a new trading platform, a new crypto trading platform on top of that. And this is almost a sort of project where it's slightly experimental. It's almost on the fringes of the existing business, and that's where bringing in a specialist software house who can just handle that project without sort of touching all the other departments, messing with the budget structure can work incredibly well. And certainly we've got our existing Sinara TLC solution that we can use to bootstrap some of these new trading platforms, a new crypto trading platform, for instance. But ultimately, the decision on whether they license it or not will be a commercial one for them in the longer term days. Some of them prefer to invest in their own technology, so they have ownership of it. So that's often a commercial conversation that we have, whereas others are actually perfectly comfortable with licensing an existing solution, something that we've built, and then they can focus their time and attention on really building up the strategic value that only they can do. And that's what we always say to our customers: you guys are the trading experts. We are the technology experts. We can provide the software, we can build the trading platform, but ultimately you are the ones who can build the business, get the liquidity in place. So we can't do that for you. We can provide the software. So it's both, really, to be honest. And we've seen a mix of both. But it's an interesting one where we often brought in to actually build something from scratch, and then the customer will essentially own the IPR of that, whereas we've already built some things internally ourselves. But yeah, that's commercial software development.
No, absolutely, but it's an interesting dynamic, and again, obviously, that time to market question is quite key. Now, we've delved into more regulation here, and I'm not sure you can necessarily ask. I think Peter Secon has a vested interest here, having been one of the MiFID II experts of Northern England over the course of the last few years. How does MiFID II become MiFID III? What key future changes do you see being introduced going forward? That's a bit off the technology channel, but maybe you can offer some thoughts.
There was some discussion about maybe how reporting could be simplified, and I guess that's always a positive. But I suspect the way that regulation tends to go is that things should become more and more transparent, and obviously that has benefits in some areas. There's a lot of OTC trading activity I know that regulators have been looking at. But again, from our perspective, I guess as a technology provider, we look at these changes and we see, well, what are the opportunities for our customers, especially when it comes to building a new system. We always want to try and explore, as I was talking about earlier, what are the added benefits that the business can get, rather than just seeing it as, oh, it's a cost base, it's just something we need to do. But often that is the case. It is something they need to do. It just needs to get done. But it's always interesting to see how we can also leverage that to improve some of the technology, improve some of the internal transparency, never mind the external transparency, break down some of those internal silos. It's always really interesting when that happens.
Very interesting. I thank you very much. Thank you, Peter, for your question. Thank you, Liam Moore, for your question. Really welcome. Good to see you on watching the show today. And we're talking about bringing technology to life in the trading world of markets with Sinara and Hamish Adourian this evening. Very interesting. I mean, we've mentioned it a few times, but how far do you think we really are in terms of thinking digital in financial markets at the moment?
I think, as I was talking about earlier, we still have a lot of silos, I think, which is just historically arisen from the way that the capital markets, financial markets in generally have evolved. And okay, there was a time, I think we were talking about, the blockchain is the absolute future. One day, there won't be a need for an exchange, there won't be a need for a clearer, because all these things will happen on a distributed level on the blockchain. I don't believe that that's really ever going to be a practical vision. But I think there are ways a lot of these businesses will increasingly transform over the years with using technology as it grows and evolves. So the more of these internal processes that are automated, more T+0, I think, should increasingly become the norm. Seeing how I think data is a really interesting one. There is so much out there that's already locked away, I think, in some of these silos, in front offices, in back offices around the world. And if they were unlocked using some really interesting algorithms, using some interesting analytics tools, there's some great services that can be offered. And actually, I think the thought that I'd like to share here is it's actually less about technology in a way than about service and people, because I think the more that we automate things, the more that we digitalize things, the more quickly that you can, say, complete a trade that would previously have taken 3 days to do. What that's going to happen is that it's going to increase customer expectations. If all of a sudden you don't need to wait 3 days to do something and it's done in one click in a couple of minutes, all of a sudden people will say, actually, well, why am I tolerating this really poor service, for example? So I think it'll be interesting to see how the technology and customer service can actually be used to create that interesting kind of a technology people dynamic. How can we use AI to improve, to extract some really interesting data, but also at the same time, as customer expectations rise, because they're using technology more and more, to actually deliver better customer service. So I think that interaction will be quite interesting one. Did I just see you quote me saying blockchain is the future? I don't know if
I'm not sure that you actually said that as we were going on. We'll have a steward's inquiry in a moment where someone in production has got very enthused. I think you said it was the future of something. I think we might have left out the sub-clause, at which point in time you said that it wasn't necessarily the future of all things. I think that's quite true. But actually, I mean, it raises a really interesting question, doesn't it? Because you've got this situation where people talk about technology and they say that it's going to revolutionize the business and destroy this and everybody will be swept away. But yet, actually, I mean, having written a book called Capital Market Revolution 20-something years ago, you look back and you think, the high street actually looks remarkably the same as it did 20 years ago. There are very, very few big changes in banks. In exchanges, I think the major upheaval has been Intercontinental Exchange, who've gone on to buy the New York Stock Exchange, etc., and bought a whole series of assets along the way. But really, I mean, the financial firmament looks staggeringly similar to how it was 25 years ago, but with a lot more technology.
It's interesting, there's been several waves of various startups. So, for example, when MiFID 1 came out, we had a whole range of startups across Europe, different MTFs, for example, and then they all got booked up eventually by the more established exchanges. And I think it's always a mug's game predicting the future, isn't it? I think we're at the stage where we'll see a lot more of those startups again. Experimenting with different types of technology. And again, that's the benefit of being a startup, I guess, because you don't have all that legacy baggage. You can try out something entirely new. So I think some of the companies we've been working with.
It's fascinating though, isn't it? Because I think at the moment, actually, we don't have any massive regulation changing across certainly the traded market space as we did. And as you're quite right in saying, I mean, what really defined particularly your early career was it was just wave upon wave upon wave of regulation, which took us all the way through until really just to the point of COVID. And everybody thought, what's going to happen next? And the answer was they all had to work remotely. From which, by the way, I think everybody agrees we had amazing technology, because certainly the parish of exchanges operated superbly well during lockdown, which was not something that I think a lot of people thought was going to happen. I mean, there were issues with brokers, there were issues with different companies, but the actual exchanges have been quite scintillating during COVID in terms of the way they dealt with things. But if you look at how we are going forward now, I mean, we are in an interesting period of evolution. Does that make you more oriented to be working with startup players, or will you continue to work with sort of established companies across your portfolio?
I think it's almost certainly both. Again, they're very different positions. If you think about our current client base, for example, you have those startups, for example, who are experimenting with entirely new types of trading, new types of apps, new types of market data solutions. That's all great at the cutting edge. And then you have the established firms who are looking at their internal technology infrastructure. These are the companies, who've been around for decades. They've had solid profitability, but they're now thinking, well, what do the next 30 years look like? And it's a different type of project, it's a different type of customer. But that's really looking at internal systems, how they can improve things, make things more efficient, more smoother, rely less on a handful of individuals, use them in a better way rather than having to fill in spreadsheets or do repetitive typing. So I think it's definitely both for a company like ourselves who work across the financial markets. It has to be, because that's how we also gain experience and gain expertise that we can then sort of cross-fertilize.
And that leads us very elegantly into this question that we just put on screen from Peter Second. Thank you once again, Peter. What is the biggest challenge facing technology?
I think within the markets themselves, I think COVID, I suppose the lockdowns assisted to some extent. And that's, I suppose, what's the best way of putting it? It's almost digital resistance or something like that, sort of digital wall, where it's just really, really hard to get new technology in place, particularly with some of the really large legacy systems that some of these companies have. But to some extent, that's understandable. If you have for example, a treasury management system that you've been running for 20 years, and literally the entire business relies on that, It might be creaking at the seams. Its data isn't particularly easy to get out from, but it does the job. But at some point, it's going to become unmaintainable. At some point, it may become unsupportable. In some cases, it probably already is unsupportable because the company that you originally licensed it from 20 years ago isn't around anymore. But it's still difficult. It's hard to sign off on those kind of investment decisions. You know, if you're a technology executive and you're being asked to make a decision on that kind of investment, of course it's difficult. And the challenge that companies like ourselves have are really to go in there with a proposition, with a solution that can help them through that, help that migration from some of those legacy systems into a more modern, more nimble infrastructure. Where the fundamental thing is really to make the data accessible. That's been the fundamental problem with a lot of these systems. The data you just can't get the data out of it. And if you can't get the data out of it, you're not really using it to its highest value. So yeah, that's a challenge, but I think we can gradually overcome that.
Fascinating. So in relation to, thank you very much, Peter, for that excellent question. I really appreciate your input today once again. So in terms of making that data accessible, I mean, it is a fascinating issue across the board. And certainly the issue of big mega data in financial markets has never been greater, and the opportunity is huge. So I'm just curious, I mean, where do you think, Hamish, the actual capital market revolution goes next?
To some extent, I've probably touched on a few of those areas. So digital assets, for example, I think that's something that will definitely continue. And I'm curious to see how some of the more established exchanges will respond to that, what kind of new assets they will come up with. And I'm sure we'll be building a few of the systems to actually underpin the trading. It'll also be interesting to see how the increased participation of retail investors changes the types of applications that in the established exchanges create and deliver. I talked a bit about the whole area of customer service and how that potentially might improve. Maybe that's wishful thinking, but I think that's certainly an area. Hybrid working, what the actual ramifications of that are as well. Talking about the cloud, I think the move to cloud it's been slow, but I think it's going to start accelerating, and there'll be more and more solutions that will be shifted to the cloud. I think another interesting area is standards and standardization across the financial markets, and to what extent, again, technology can help deliver that. I mean, there's so many things if you think about, the codes, different account structures across the industry, which can make interoperability incredibly difficult. So that's an interesting area to see how that can be resolved. But that has its own challenges. But technology can help address all those areas. I think lastly, but certainly not least, mentioned resilience. I think that's an area of continued investment where companies will need to look at how they can just keep going essentially in times of high market volatility. And again, that's not strictly just about making sure your systems can cope, but also that you have the right people and processes in place to support that. And people, I think, is an interesting one. I mean, what ultimately as a software house, what we need to do is recruit, maintain really talented, smart software engineers, project managers, testers who can ultimately build and deliver these solutions and support them. So that's the other big area, which is our support team, support professionals who can actually, over many years, often keep these systems going. It's a truism that we spend a lot more time supporting the system than actually developing it in the first place. So maintaining and recruiting, developing talented IT staff, that's a challenge, and it's even more of a challenge now. And that's certainly one area where we keep offering a good value proposition to our customers.
Well, I think that's absolutely fascinating altogether. I mean, we've got the whole concept of everything from hybrid working, and therefore indeed how you manage to manage that talent pool, the possibilities for artificial intelligence, for SaaS, for software in the cloud, for all of the possibilities that are brought to us, whether you're doing a lift and shift or you've managed to build something that's cloud native, the impact that there will be from obviously the digital asset, the blockchain marketplace across the world, and therefore how that also impacts with the retail investor, which is all a multiplicity, a cornucopia of possibilities of how Sinara are bringing trading solutions to life already in the overall world of financial markets. And it's certainly very, very interesting to hear you saying about data standards. I think that's something that's very, very interesting, because certainly there's a scary possibility that that may be implemented by the sort of clod-hopping regulators who actually don't have this first single clue of what they're doing. But your point is well made, actually, because, as you say, Hamish, what you're actually going to be spending on the development of a system is probably going to be matched or indeed exceeded by the costs of running that system over a series of years thereafter. So, ladies and gentlemen, we have been bringing trading solutions to life with the fabulous Hamish Adourian of Sinara, one of those really, really interesting companies that are sitting there behind zillions of trades and transactions that we investors are doing every day, but are never actually known or seen by the general public. And I think actually it would have to be said probably from Sinara, you don't want to be seen or known to the general public in that respect, because if it was, it would mean something's gone wrong. So the fact that you haven't ever heard the name Sinara, various of our listeners today and viewers, is precisely because of their success in terms of what they've achieved over time. Apologies to Anthony Clancy, we didn't quite get time for your question today. Thank you very much, though, for your other questions. Thank you too to Les Calvert, to Marcus Ward, Simon Huckle, Ian Bonsor, and thank you for your questions, Peter Secon. John T, good to hear from you. Anthony Clancy, as I say, sorry we didn't get to your last question there. We were delighted to see LinkedIn user, whoever that was, lurking behind the anonymity facade within their big data environment. John T, Ian Miller, Woman on It, Carl Strong, and Carl Stone, Liam Moore, and indeed, it only remains for me to say a big thank you to our production team today, Racy, Jamil, Mary, and Beata. You've done a fabulous job, as always, bringing this together, where I'm sitting in the Caribbean and across the world. Thank you very, very much for your kind comments. And John T, it's been another super successful conversation in the lineup of the discussions of our overall history of brilliant discussions. Number 61 is more or less at an end. We're just waiting to see. Next week we'll be back, but we're having a little difficulty, it seems, bringing you that board. We're going to have another fascinating guest for you in a week's time. Only remains for me to say thank you very, very much, Hamish Adourian. It's been a super show altogether. Wishing you and Sinara all the very, very best for the future. My name is Patrick L. Young, and we are looking forward to seeing you next week, when we've got a highly special guest, ladies and gentlemen. We've got Patrick Young. And no, it's not me. Tune in next week for what is going to be a singularly unique Patrick Young with Patrick Young discussion on IPO-VID. My name is Patrick L. Young. Thank you very much for watching the show today. I wish you all a great week in life, blockchain, and markets. Thanks again, Hamish Adourian. Sinara, bringing trading solutions to life. We'll be back on Exchange Investor in the course of the week, ladies and gentlemen. Thanks for watching.